Please read this disclaimer carefully before proceeding further. Welcome traders to this week's analysis of indices. Thanks for joining me in this analysis. My name is Vic. Hope you had a great trading week last week. So let's find out what kind of opportunities we have on indices for the next week. We haven't been actually covering indices for a couple of weeks. I think we took a little gap, and the reason behind that is because the previous levels that we identified on those indices were still valid. There was nothing new that was happening. So if you are swing trading or taking position in the market, then those levels that the previous analyst was still valid. So that's why I did not actually cover that. But now I think it is good time for us to start to look back into indices once again. So as usual, we'll start with dollar because everything is kind of dependent on dollar. I've done full update on dollar already. If you haven't actually seen that, go ahead, check it out. I've already uploaded that onto my channel. And also, I strongly suggest you to check out the dollar index in-depth analysis from the past week, because there was a lot of educational material in there, and at the same time I showed you from higher time frame point of view, all time frame point of view, what were the different aspects and different cases for dollar, whether dollar was actually going upwards or downwards, and on higher time frame, what are some of the myths which are running in the market about dollar. We talked about that as well in that video, so go and check it out, because everything that you have in financial world right now is dependent on dollar. Okay, so I'm not going to actually repeat this entire thing, but on dollar we see that if this FCP zone is broken to the upside, then we are looking for the next one here, which we found a few weeks ago, and we were able to take short positions based on this move on various currency pairs, because if dollar is going down, then euro was going up, and obviously indices will also try to go back up. So if dollar is falling, indices are going up. It's not a rule, but that's how the most of the time market works. This is not 100% correlated market, so there can be exceptions to it. Be careful of that. But in long run, or even in the medium run, they tend to be in correlation with each other. So if the dollar is falling down, we were expecting indices to make a little bit of recovery. And if the dollar keeps on falling to the next level, which is 92.89, which is near about 93 level or so, if that happens, then that means indices are expected to rise even higher. Another thing is that if dollar starts to go back up, then indices are supposed to go down a little bit. So that's a general idea. And if you want to trade the dollar index itself, then this is the analysis. And as I said, there is a full update for dollar itself as the standalone dollar analysis available on the channel. Okay, as always, we'll start with S&P500 because that's kind of mother of all indices that we have. So we had huge movement down, which was kind of reaction to coronavirus, but I won't even say that this was not expected. A kind of correction was expected, and I covered that on an article on LinkedIn. If you do not follow me on LinkedIn, then you can find me as Vikinsa, or my company name as Vikinsa Capital Management there, and you can find that article. That I wrote that article in February 2020, and I was talking about this particular fall. But what we have here is that market has created an extended W pattern, which is one of the FCP patterns that we have. And if I bring in original analysis, this is what we had. But even before we go there, what you should do is just draw Fibonacci on this particular leg, and you will see that it has actually come to 113 and started to fall down. So this is exactly what one of the FCP pattern that we have and that we teach as well. If you are interested in learning more about it, or joining our training program, then you can find the latest brochure about what we cover and everything on Vikinsa.com. Go and check it out. So the market started to fall down because the W pattern has been completed, and that means we were looking for short positions here, and we were able to take that. Now if you look at the previous analysis that we performed a few weeks ago, you will see that all these levels are still kind of intact. We were expecting market to fall down or go up. There were two possibilities at this particular level. It fell down and then it recovered, and now that particular level of 33.28 is turning into kind of like support. So you can treat this entire zone as like that, and you will also notice that we have kind of like inverse head and shoulders pattern appearing here, which can push the price into this FCP zone that we have. So this is FCP zone, which is Fibonacci Confluence pattern zone. This is an important one. It actually, if the market starts to go above 34.30, then you can still this is the maximum kind of like maximum strength that it can have, which is basically going all the way to 100%. So we must put that line here as well. Okay, so that is also an interesting level to watch out for. So how do we trade this? Like, all these levels are still intact. What we need to do is we need to wait for the market to start moving upwards. If it starts to move upwards, then the next level to look for a target will be this level of 3430.9, and if that level is broken, then we are looking for somewhere around here, which is going to be 3500 level. And if the market starts to go down, then we'll have to trade going into this FCP zone. So because this is so close to FCP zone, the price currently right now, I will not be looking for a short unless it has broken through this FCP zone, and now I have a clear path to go to that level. So this is what we are looking for. So all of these levels are still intact. I'm still bearish on it, but for some duration it may start to go back up. I will not go for a short position from a swing trading point of view until this FCP zone is broken to the downside. For now it is looking a little bullish as far as I can see. If I click on it, we can see that mid of the Bollinger Band is acting as support, so we can expect market to move into this sort of level, which is high, the top of the Bollinger Band, where we have 34.30 as well. So this looks like a very good level where we can look for that level can be treated as a profit target level. Okay, let's move on to the next one, which is going to be US30, because US30 kind of mimics what S&P 500 does. It's kind of subset of S&P 500. So pretty much like S&P 500, it has started to show a little bit of bullish movement, and which we were expecting. So if I go to the US30, the FCP zone is around here, and these levels are still valid. You can see that market has been respecting these levels with little bit of tolerance limit. So you can also notice that we have this inverted head and shoulders, pretty much like what we saw on S&P 500 as well. So the plan is again very simple. It is basically, if the market starts to move upwards, then this is the level that we are looking at, and if it starts to move up, then we are looking at that FCP zone where it can go to. So I'll look for a confirmation here. We have 5 confirmation techniques. If I get any one of them here, then I'll look for a long position going into 28,372 level, and if that is broken, then only we'll be looking for something like this. Not exactly that level, maybe towards the end of the start of that zone. So these two levels are there. Whenever I'm drawing this FCP zone, that basically means that this is the lowest level, that's the highest level, and price can react anywhere, at any point in that particular zone. So US30 is also looking exactly S&P 500, no surprise there. So far we have covered US30 and S&P 500, and if you enjoyed this video, if you found this useful, hit the like button and make sure that you subscribe to the channel and share with other traders and trading communities as well. So let's look at the Nasdaq. Okay, Nasdaq had a little bit of a different view. The levels are still valid. When we last analyzed a few weeks ago, we were expecting it to move into this level. It did, but only after a little bit of retest of the previous levels here. It moved there, and then we also looked into the possibility of moving into 11,552 where it did, and now it is falling right now. So Nasdaq is not looking like S&P 500, which is understandable, but these levels are still kind of intact. So if the market starts to move upward, then this is the level that I'm looking at, and if the market starts to fall down, then I'll be looking for somewhere around here 10937. But there is another thing which is happening right now, is that this candle is engulfing candle, and that is showing us a very good rejection from the top. However, it hasn't been able to break through this mid of the Bollinger Band, so I'll be interested in looking at this level as well, 11,178. If that is broken, then only I'll be looking for a short position into the next level, and these levels are still very good, so we can keep on playing them as support and resistance, if you want to call them. For me, they are more like, you know, Fibonacci confluence zones or Fibonacci confluence levels. So that's my analysis on Nasdaq. I hope you found this useful. Let's look at UK100, which is FTSE 100. On FTSE 100, the new structure has been formed. There has been a lot of consolidation here as well. So let's start afresh. Let's remove this entire thing, go to the monthly time frame, and then we always start from monthly time frame, and the reason behind that is because monthly time frame gives us the best picture of what the market is trying to do. Right now what we can see, that market is kind of like an indecision. You see that market fell down, then it went up, and somehow the market was pushed back down. So if we try to read the story behind this, market was falling down, then recovered, then fell down and creating an engulfing candle here, but got pushed back up again. In this month it was pulled down bearish, so it is creating an alternate colored kind of candle. So 1 2 1 2, right? So the next month, which has just started now, is expected to be bullish because if it is doing alternate candles there. So this is the kind of structure that you're looking at right now. So you can call this a triangle. Okay, and if that is the case, then ultimately it will have to make a decision where it wants to break out either to the upside or to the downside, because it is reaching the final point of this triangle, right? You know, the triangle is getting squeezed. Okay, so if that is the case, then we should prepare for both bearish and bullish opportunities on FTSE 100. Okay, right now as you can see, our analysis on monthly is also being supported by weekly. The Bollinger Bands are getting squeezed here. That means the market is right now is doing something like this, and it is running into kind of like, you know, mini channel, and it is also at the same time it is consolidating. So we do not know at the moment whether it wants to go down or up, but if you pay attention to this entire structure, you will see that market is creating a kind of W pattern. So if I draw Fibonacci from the top, it's 50%, and if I draw from somewhere around there, it's 61.8. okay, and if I draw Fibonacci from bottom to this level, okay, this has come to 38.2, which is looking like a very, very good support level. So now I've got a very good idea what the market is probably trying to do. Okay, so this is a very important level for the market. So if I draw something like this, this is 38.2, and so far the market has not been able to break through this. Okay, so that means it is more bullish than bearish, because market has tried that level several times. By the way, this is very simple to learn and very simple to apply if you know how to draw Fibonacci levels properly in the right way. And as part of our training program, we also teach that in our curriculum. So if you want to find out more about that, go to Vikinsa.com and you'll be able to see the curriculum like this under training section. Okay, now what we have here is that we are looking for bullish movement, because the market has not been able to break through that level, and if that is the case, then the next week also we'll be looking for bullish movement. So far it is looking bullish, but we'll have to obviously go down to the lower time frame to see where it could be going into. But if you pay attention here, we see that we have a W pattern forming from like this. So this is the midpoint. So that means this is very, very important for us. And if that midpoint is broken, then we are looking for near about this level. Okay, so that's also very important for us. So this is my trading plan. On UK100 there can be very good opportunities because we have consolidations, and in consolidation we get a lot of FCP, Fibonacci confluence patterns, which is basically W&M patterns, quantified W&M patterns. So when the market actually breaks through this, I'll be looking to go long into that. Then it will probably going to perform a retest of that trend line that we saw on higher time frame. And if that retest is successful, then I'll look for another long position, and if that gets broken, then we are looking for long positions coming somewhere around here. So that is going to be my plan for FTSE100. On the bearish side, as I said, what we need to do is we need to draw a zone which is going to be our FCP zone, and so this is FCP zone here. Okay, once this zone is broken, then only we'll be looking for a short opportunity, right? So for that we'll have to wait, because we'll have to see where it wants to go to. But if it does break through that, then the next level that we are looking at is here and here. Okay, so if I just remove this, this is going to be the next level. So on the bearish side, if the market breaks through this FCP zone, then the next level that I'm looking for is 5640, which is also kind of like, coincides with the channel. So that should be very good level. Okay, so that's my analysis on UK100, FTSE100. Hope you enjoyed this. Hope you found this useful. If you did, hit the like button and let me know in the comments what you think about this analysis. Okay, one last one, because one of my followers actually requested it. So I'm going to look at DAX as well. Now DAX, I'm not looking exactly at the right chart because there are a lot of gaps here, but this is the level that we identified last time when we did the analysis, which was a few weeks ago, and that level is still valid. It is being tested by the market 1 time, 2 times, 3 times, and the market is still falling. Okay, let me see if I can find a better chart for this which does not have much gaps. Okay, so okay, that's also not very good. Okay, this one is looking a little better, okay, because it does not have gaps, right? Okay, let's go to the monthly time frame, and we can see that market has created a W structure. It looks like V, but it is actually a W. There is no such thing as V. The market has gone down and created a W structure. One of the things that I should tell you, that this is very important level. Why? Because there is a gap left here, right? That's we saw the similar kind of thing on S&P500. So market came to that zone and fell down, and now it is kind of like struggling with mid of the Bollinger Band, and the Bollinger Band is also squeezing, so we can expect a breakout. So far it is holding, so we can expect bullish movement on DAX. Now if you go to the lower time frame, you can see that market is creating a W pattern, which basically means that we have very important levels here where the market can go to, and these are those levels. Okay, so this is how I'm going to play this if I'm going to trade DAX. If I get a good opportunity here, if I get confirmations out of 5 confirmations, if I get at least 1, then I look for a long opportunity from here into this level. Then I'll take my positions off, then I'll wait for market to show me further confirmation to go long, and that will be the next one. After that, it is possible that market may show reaction like this, and this can very well turn into a reversal. but we are expecting at least some reaction here, and then if the market continues, then we'll be looking for something around here. So that's my plan on DAX. And right, so okay, we covered we covered DXY, S&P500, US30, which is Dow Jones, and FTSE100, and DAX as well. So hope you found this useful, and I really wish you very good luck for the next week, because if my analysis is helping you out in some way, then I'll feel very good about this. Let me know if it is helping out, if my analysis on regular basis or weekly basis is helping you out in making money or understanding the markets or giving you some kind of educational content. Then let me know in the comments, or you can reach out to me on any of the social channels to let me know about that. And that usually gives me a lot of motivation to actually come up with better content for you. Okay, right, so I'll leave you with this, and hope you will have a great trading week next week. If you're interested in learning how to analyze the markets the way I do using Fibonacci Confluence, then head over to Vikinsa.com, and under training section you'll be able to see Core Strategy Training Program. On this page you'll be able to see the testimonials of previous students, and also look at the brochure. The brochure has a lot more information, including the course structure and the Fibonacci Confluence Training Program curriculum. This is a very extensive program in which we cover basic core Fibonacci concepts along with the advanced concepts to analyze the markets with high probability. If you're interested in joining this program, come to Vikinsa.com, and under training section you'll be able to see and submit this form.